High inflation data can pressure the Federal Reserve to keep interest rates higher for longer, which may impact stocks, bonds, and currencies. Confirmed that Trump will unveil details about the Bitcoin strategic reserve at Friday's crypto summit. It's quite complicated, as my point of view, to try to make new trades with the SP 500 in this moment, considering this big pullback. Welcome to this week's market analysis. I'm Isa Martinez, a trader and analyst at xChief, and today we'll be diving into the latest developments shaping the financial markets. With inflation concerns, central bank policies, and geopolitical tensions driving volatility, we will take a closer look at the US dollar index, SP 500, Euro USD, and Bitcoin using technical analysis and action of the price. Whether you're a seasoned trader or just starting out, understanding these key market moves is essential for making informed decisions. Stay tuned as we break down the charts and highlight potential opportunities. On Tuesday at 9 a.m., the U.S. job opening reports will be released. This report shows the number of job vacancies in the U.S. economy. A higher number suggests a strong labor market, while a decline could indicate weakening job demand, which can influence expectations about future interest rate decisions. On Wednesday at 7:30 a.m., we have the core CPI, the monthly and the yearly reports. These are crucial inflation indicators. The core CPI measures price changes excluding food and energy, which tend to be volatile. The CPI monthly shows the percentage change in consumer price compared to the previous month, while the yearly report compares prices to the same period a year ago. High inflation data can pressure the Federal Reserve to keep interest rates higher for longer, which may impact stocks, bonds, and currencies. On Thursday at 7:30 a.m., the core PPI and PPI monthly reports will be published. The Producer Price Index measures price changes from the perspective of producers. The core PPI excludes food and energy prices, providing a clearer view of underlying inflation trends. If producer prices rise significantly, it may indicate future inflationary pressures for consumers. Additionally, the unemployment claims report will be released, showing how many people feel for unemployment benefits for the first time. A rising number could signal a cooling job market, which might affect the Federal Reserve's monetary policy stance. Finally, on Friday at 9 a.m., we will see the preliminary University of Michigan Consumer Sentiment and Inflation Expectations report. Consumer sentiment measures confidence in the economy, which can influence spending behavior. If people feel optimistic about the economy, they are more likely to spend, which supports economic growth. On the other hand, inflation expectations reflect what consumer price anticipate for future price levels. If inflation expectations rise, it could lead to increased market volatility as traders adjust their positions based on potential Fed actions. This week's data will be critical in shaping market movements, particularly for the US dollar, stock indices like the SP 500, and major currency pairs such as Euro USD. Stay tuned for updates and market reaction as these events unfold. Now we will continue with the most important fundamentals of the week. The SP 500 fell sharply on Thursday as investors' concerns over tariffs persisted despite President Donald Trump granting a temporary reprieve to Mexico and Canada. The Dow Jones dropped 427 points, the SP 500 declined by 1.8%, and the Nasdaq fell 2.6%. Markets remain uncertain as investors await more clarity on US trade policies after Trump announced a 1-month delay on the 25% tariffs for Mexico and hinted at a similar move for Canada. Economic data showed jobless claims fell more than expected, but Philadelphia Fed President Patrick Harker warned of economic stress in the consumer sector and potential inflation risks. Investors are now focused on Friday's employment report to assess the health of the US economy and the Fed's rate policy amid inflation concerns. Shifting our focus from traditional markets to the crypto space, Bitcoin extended its rebound on Thursday, rising 1.7% to $90,278 as expectations grew over President Donald Trump's crypto reserve plans ahead of a White House summit. While Trump made some concessions on tariffs for Canada and Mexico, his trade policies against China remained, with further duties expected in April. Despite uncertainty, Bitcoin remains well above last week's sub $80,000 lows. When concerns over US economic growth and trade tensions hit risk appetite. US Commerce Secretary Howard Lutnick confirmed that Trump will unveil details about a Bitcoin strategic reserve at Friday's crypto summit. However, questions remain about whether it will be established through executive order or require congressional approval, with the latter facing potential resistance from policymakers. Now let's continue with the technical analysis, and we will start as always with the DXY. The first thing we notice is that this week was a strong downward movement from the DXY. We have reached several key points located at 104.162, and we also had the opportunity to reach this point of the DXY, which was located at 103.408. Depending on the fundamentals that we will have on Friday, we will see a new movement from the DXY, but after all the liquidity that the DXY has gathered, it's difficult to think that it will keep falling down. For now, we need to understand that all this downward movement was due to the tariffs that President Donald Trump has established for Mexico and Canada. But we need to understand that this big downward movement maybe will finish soon, considering that the next days we can see other fundamentals, maybe positive fundamentals, so we will see a recovery from the DXY. The bearish targets for this week will be located at 103.408, and the bullish targets, I will consider this last range from this point to this point, and the first target that we will consider will be located at 105.711, and for the other ones we will use Fibonacci. The next point located at 106.171, and the last one located here at 106.826. My favorite objective as a bullish objective will be here, because with this point of the DXY is also close to this fair value gap that is located at a same point at 106.967. So for me, this is one of the best points that we can consider for a recovery from the DXY. Now let's go with the SP500. It's important to understand that after all these geopolitical tensions, we are seeing a big correction, a big pullback from the SP500, and we are reaching one of the objectives we have established the last week, which was located at $5,696. We have another day of trading that is tomorrow Friday, but you will be seeing this video on Sunday. So just remember that the next objective for the next week will be here, located at $5,674. After this, if you are expecting that the SP500 will keep falling down, please take into consideration that the next points of liquidity for the SP500 will be located in further points, and with that I mean that the next objective will be located at 5,408, and the last objective will be located here at 5,118. And before doing anything, I will tell you to have caution with the SP500, but if you are bullish with this, I will consider these points of the SP500: 5,986, 6,069, and finally the last all-time high located at $6,147. It's quite complicated as my point of view to try to make new trades with the SP500 in this moment, considering this big pullback. Now let's see the Euro USD. As you can imagine, with all the things we saw with the DXY, the Euro USD make a strong upward movement, also in a response of everything that is happening right now with the geopolitical tensions that I was telling you. For now, we need to consider that the Euro USD have left a lot of fair value gaps when it made the last upward movement, and we can see one fair value gap located here. We can see another fair value gap located here, and we can see several fair value gaps. So with this, I'm telling you that you need to consider that before the Euro USD tries to make a new upward movement, or at least maintain this high volume of upward movements, please consider that before that we can see a Euro USD trying to make a pullback to any of these points, to any of these fair value gaps. I will just show you this one here. Maybe we can establish that as our last fair value gap. So the first objective for the Euro USD as a pullback objective, 1.074. The next one is located here at 1.065. Next one located here at 1.057. And the last one located here at 1.044. If you're considering buying the Euro USD soon, maybe these will be good points to make a new trade with this asset. Now let's finish with Bitcoin. Bitcoin was trying to make an upward structure, but before doing anything, I told you before, we need a strong movement to try to break $102,094, and I'm telling you, because before this happens, it will be really difficult to trade Bitcoin. However, if you are trying to see a structure in Bitcoin, I think we are seeing right now an upward structure, and the next objectives, at least in the 4 hours interval, will be trying to find this objective here at $95,000, and maybe we can also try to get $99,500 before trying to reach the next objective. That wraps up today's analysis. If you found this breakdown helpful, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss an update. If you are looking for a reliable trading platform, sign up at xChief.com and start trading with the best tools and market insights. See you in the next video.